Well, yesterday I must have clicked record for the video that I was doing yesterday talking about how good the stock market account was going. Everything was going really well, and then as soon as I clicked that video and clicked record, wow, the stock market took a massive turn, and the news that's come out since then has been very poor, and it's worrying. The information that is coming out at the moment through certain things with the job data, for example, is very worrying for the market, and top that off with a very weak Q2 earnings season that is going on at the moment. Even Wells Fargo reported the other day about how far below expectations a lot of companies are reporting at the moment. Things are looking pretty bad out there for the stock market and the economy, and things are pointing in the direction that a recession could possibly be on the way. So today we're going to talk about what is going on in the stock market, what is going on in the economy, is there going to be a recession, and as well as that I'll be talking about the Fed, MercadoLibre's earnings, DraftKings earnings, and Block's earnings as well. So there's a lot going on today, guys. Let's get started. So in a second, we're going to get onto the really negative news that's going on out there at the moment that is really pushing the stock market down at the moment. I'm sure you're feeling it in your accounts a little bit today. But before we do that, I just want to say that we are currently going to do a summer sale on the Patreon. I'm running this until Sunday midnight, so only the next 2 days. And the Patreon is going to be on sale. I don't often do a sale on the Patreon, only once or twice a year. And it's going to be from £60, but it's actually a little bit more than £60 when you actually include the Patreon fees on top. It's actually more towards like £72. But I am going to reduce it from £60 down to £45, and that will give you access to the Discord, the exclusive videos for a whole year. That is over 100 videos you'll get access to. You'll get to know my live buy and sell alerts, which is very important right now, because if we are going to end up in a recession or any stock market correction or crash, you'll be able to see how I capitalize on the downturn in the market. I did make a few moves today in preparation that if we are going to see a downturn in the market, and you'll hopefully see me do what I did in 2022, 2023, 2024, where I really capitalize from that stock market downturn and learn what I do in this sort of situation. So if you do want to join that, make sure you send me an email. The email is in the description of this video, which is jkrinvesting@gmail.com. Send me an email, I'll send you a payment request over on PayPal, and then we'll get you on to the Discord. Like I said, I'm only doing it to Sunday, guys, so take advantage of that, because we don't do a discount on the Patreon that often. But enough of that, let's get stuck onto some stock market news. So first of all, when I clicked record on the video, everything was going really well, and then we started seeing the downtrend. So what happened? First of all, US manufacturing. US manufacturing came in pretty weak, and that was yesterday, which isn't good. It dropped to an 8-month low, and once again, we're just seeing a bit of bad data coming out. And when we have the stock market at elevated valuations, which I've been calling out on the YouTube channel for the last few months, when you're at elevated valuations and you have that little bit of negative news, you're going to have that correction in the stock prices. Now, what added on top of that was even worse news. So the extra bad news that came out is that US employment rate ticked up to 4.3%. Now, this isn't good, because I've always said to you guys, the one thing that I always worry about, the thing that will get me really nervous on the stock market and the economy, is unemployment. Unemployment is the big thing that always worries me in the economy and the stock market. The economy is not the stock market, and the stock market is not the economy, but eventually, if we do see the turbulent times in the economy, that will pass on to the stock market, and that will affect companies' earnings. And with the unemployment that is upticking at the moment, this was supposed to be at 4.1%, guys. That was what was expected, and as you can see here, it came in at 4.3%. The uptick was quite a big uptick, and this is what worries me, because once you see that employment rate tick up, what you're seeing is you're seeing more people that are not having work. They're going to not be spending in the economy. You're going to see more defaults on loans. That will affect other companies. That will affect other companies where then they have to do layoffs. And as well as that, you'll just have a big fear. You know, as soon as the consumer hears, oh, employment's getting a little bit high, there's the economy slowing down, that's when everyone else pulls back and goes, hey, I'm going to be a little bit more cautious at the moment as well. And that's the knock-on effect. And that is the big worrying thing. As well as that, the job data was very weak as well. I think the US added 114,000 jobs, and that was the fewest since since December 2020, which was obviously because of the CV pandemic. But I think this was also supposed to come in at 180,000, which was way off what we was expecting. And that just adds on to the top of what we've seen at the moment with a lot of weak data. We've seen the likes of Wells Fargo come out and they've said, hey, these Q2 earnings are very poor. I think normally we see around about 60% of companies beat earnings. We're down at around about 40%, and that's not a surprise. It's not a surprise seeing all these weak earnings coming out, because any consumer stock that we've seen has basically said, yeah, we've seen a slowdown. You know, you look at the likes of McDonald's, you look at the likes of Nike, you look at the likes of Starbucks. All these consumer stocks are saying like it's getting a little bit weak out there, guys. And it just adds on to the worries that we've seen at the moment. Now, what made me laugh actually about yesterday's video is that I was talking about Hims and Hers and you know, it being up so much, and as soon as the stocks go down, it's amazing. Like as soon as people come out of the work, oh, it's down so much today. Like, oh, yeah, I'm going to cry on my Hims and Hers position that's only up 240% now. I'm so sad about it. Anyway, carrying on the story about the slowdown. I mean, when you look at the unemployment data now, you can see there is that uptick that's going on in that unemployment data, and it's the highest it's been for a while. It's as high as it's been really now towards where we were in 2019, where we had to have the Fed cut rates because it was like, oh, the economy's slowing down a little bit at the moment. So this is the highest it's been for a while. And just to show you what the peak time of when we did hit very high unemployment in the Great Recession, you know, one of, if not one of, you know, the worst economic times that we've seen, that was, you know, 9.9%. So that's where, or 10%, that is where the levels we do get to when it gets really bad, just for context. But you can see there's a strong U shape that is building on the employment, which is, you know, very concerning. And like I said, I was listening to Paul Hill and Paul Scott, which are two investors that I really like the other day, and this is on Vox Market, and they were talking about why has the US done so well compared to like the EU. Everyone looks at the US and goes, what's going on in the US? And that can sometimes hold up other markets if the US is still very strong. But the fact that we have the US pulling back now is a little bit concerning. But we've seen weaker markets out there in Europe or the UK, but the US has been doing okay. So everyone's been, oh, but the US is okay. So, you know, that's giving everyone a bit of confidence. But if the US was to have a bit of a downturn, that would wobble a lot of markets, in my opinion. That's why we've seen such a weak time in Japan last night. Japan had a weak session. So did a lot of the Europe. Even the Europe stocks are down today off the US job data. What happened, I don't know if you can see this graph here. They shared a really good graph. But if you look at the Europe and especially the UK, what happened in 2022 and 2023 is that we saw all these costs going up and we went, oh, this is a little bit concerning. We're going to stop spending money. And that's why our economy went a lot weaker than the US economy, because everybody kept money to the side and thought, oh, if my energy price is going up that much, if my mortgage is going up that much, I need to save more money. And that's why we saw such a weak time in the UK and US. What we're seeing in the US at the moment is totally different, because they didn't go, oh, we're going to save money. They just continued spending the money that they saved up during the whole COVID-19 situation. They kept spending and spending and spending. But the problem is the consumer in the US is starting to run out of money. They're starting to get impacted by all these costs that went up, all this inflation that went up. They're starting to really get impacted by it now, and the savings are going down, which is also another concern that we have at the moment. You look at the delinquency rates, they're starting to tick up. They're now higher than where they were pre-2020. All these figures are adding up to where we're getting a little bit concerned at the moment. Now, the big thing that adds on top is and I'm trying to be careful about what I'm saying, because there's a lot of very strong words I could use to explain what the Fed have done here. But they've messed up. The word I was going to use is beginning with an F, and they messed it up big time. The Fed have well and truly messed up. I called this out a couple of months ago. The Fed are making the wrong decision. The data is getting. We looked at Q1 earnings, guys. How weak Q1 earnings were. We're seeing the uptick in the unemployment, but they've left it another 3-4 months, and what's happened? It's got a lot worse. Where it's very, very noticeable now. The market is really picking it up at the moment. It's got a lot weaker out there, but the Fed are not doing anything to help anyone. They kept they've put them up at record highs, and it's now affecting the consumer. Where all of a sudden the market, especially today, went, holy, this is not good out there at the moment. It's got to that sort of point, which is what we didn't want to see happen. The Fed, even 2 days ago, held interest rates at the same level, which is absolutely insane. I have no idea how the Fed and Jerome Powell sat there, saw Q2 earnings season, because they would have had all that data, they would have had a good guess at what the employment rate is and the job data. They would have seen a lot of they've got the best figures out there, but even publicly, like the Q2 earnings that were out there, I don't know how they've seen the earnings that have come out from all the consumer spending companies, and they've all gone, it's getting weak out there. And they've gone, you know what, it's all right, the economy's holding up, let's just keep it the same. Interest rates, I don't know how they've done it. I don't know how they've sat there and seen the data and gone, yeah, everything's all right. It's insane. It's insane. And the thing is that what the metrics they're even looking, they've ignored the company's earnings, which is insane, but they're using all this backward metrics, all this backward inflation data. When they look at, and I can't get true inflation to work today, guys, but true inflation's at 1.5%. That's more up-to-date information where they're not using heavily weighted in certain sectors on the sectors that get affected by inflation at the last point. It's not a level playing field, the data they use, and it's all historic data on trailing sectors. When you actually look at inflation is at a good rate right now, and the economy is slowing down. And they've sat there, they've seen the earnings, they've sat there and they've not done anything about it, which is insane. But this is the Fed. We knew it was going to happen. It's just crazy to see Jerome Powell and the Fed inadequate at their job once again. You look at what caused this situation, okay? Obviously, inflation went up, prices went up, oil prices went up, there was just too much free cash out there as well. And they were so slow to react to it. When you look at when the first interest rate hike came up, the first interest rate hike came up in March 2022, okay? Do you know what inflation was in March 2022? Let's have a look. So in March 2022, inflation was at 8.5%. 8.5%. So the inflation was 4 times the Fed's target until Jerome Powell and the Fed went, we probably should do something here. The indications that inflation was getting a little bit out of hand was in 2021. It took them 12 months to react to the inflation that was going on. 12 months, guys. They're 12 months late to the party. It's incompetent. That's what it is. It is unbelievable to see. And now inflation has been coming down. It's coming down, and all the backward metrics that they're using, once again, is so slow. We're realistically at 2%. And you know what? Inflation's going to come down even more rapid in the next kind of couple of weeks and months, because if the consumer's getting weaker, there's less spending, there's going to be less price competition going on. They're going to have to drop prices. Oil's going to get weaker. So if anything, inflation is only going to get even lower now with the data that's coming out. And yet we've been at a good inflation rate for the last kind of 3, 4, 5 months, and the Fed has sat there on their hands and not reacted once again. And what we're going to have, the Fed, once again, 12 months later, when everything is going upside down, when everything has gone wrong, then they react and cut the interest rates when it's too late, when the consumer has been affected, because they have got blood on their hands once again. They've been so slow to react. I still, right now, and it's really pissed me off, I don't know if you can tell, it still right now blows my mind how the Fed 2 days ago sat there and actually went, you know what, we don't need to cut interest rates. It's insane. And now we're having the effects. So yeah, overall my thoughts are is that we've seen the data getting weaker, I've called it out, and now we're starting to have the consequences. And I'm a little bit worried, guys. I've said it for a while, I'm a little bit worried where we're at the moment, and if anything, the last kind of 2 days have only added into it once again. Think about a week ago I said to you guys, if you ask me where I'm at right now, I'm even more worried on the market, and if you ask me again that question, I'm even more worried from where I said that 7 days ago. It's got even worse. It's not good out there, guys, and I am concerned. I'm concerned that once again we're seeing such a slow reaction from the Fed here, and it's not good. And I would not be surprised to see the stock market have a correction now with what's going on. Obviously, no, I've not got a crystal ball. It might not happen, but the data out there is concerning for sure. Anyway, that's a lot of talk about interest rates and the Fed and the week data and potential stock market crashes and recessions, let's talk about some individual stocks. So first of all, we've got DraftKings. DraftKings came up with their earnings. The stock is down 12% today, and it's not because of earnings. The stock was actually break even after reported earnings. Unfortunately, they have timed this not on purpose, but badly, because they have done it on a terrible day in the market, and because of that, they're getting slapped because of that, which is a little bit unfortunate out there. The earnings themselves, like I said, I've done an exclusive video on Patreon where I go fully into the DraftKings earnings and give my full thoughts on the earnings there. I normally do it on YouTube, but with what's gone on today, I've done it on the Patreon. Like I said, you can join the Patreon right now on the summer sale. And I've done a full deep dive on the DraftKings earnings. But what I'll say with the DraftKings earnings is they're good. Not as good as what they normally are. I think about 8 out of 10. They got hit by some short-term impacts, which we cover on the Patreon. But the long-term story is still there for DraftKings. Very good growth. Hiked up the revenue guidance, which is far ahead of where they were at the start of the year. A little bit of an impact on the EBITDA guidance, which we talk about the reason why on the Patreon, but the long-term picture is still there as the company moves into profitability and free cash flow. And because of the free cash flow that's really ramping up now, they actually announced a 1 billion share buyback of the company, which is very, very much a big share buyback. And if you look at the path to revenue growth and profit growth they are doing now. I mean, analysts are forecasting next year nearly 1 billion profitability, which if you do, we'll say 1 billion to make it easy maths. I mean, if they do 1 billion in, 1 billion in free cash flow. I mean, if they do 1 billion in free cash flow and the company today is actually 15 billion market cap, that's 15 times free cash flow for a company that's doing very good growth, which is very attractive. So yeah. The long-term story is very good with DraftKings still. Few concerns in the short term, which weren't DraftKings' fault, which I cover on the Patreon. So if you do want a bit more information on the earnings, go watch that video on the Patreon. MercadoLibre also reported earnings. The stock is holding up a little bit more than DraftKings. The stock was up a lot more, but is unfortunately once again down a little bit because of the red day in the market. We're still doing okay, up 8-9% at the moment. MercadoLibre's earnings, unbelievable. Very, very good earnings. The EPS was a beat, and it beat by $2. Still a 20% beat on the EPS. That's insane beat on the EPS side of it. The profitability is really ramping up on MercadoLibre now. What was more impressive? 40% revenue growth. We've not seen a 40% number for a while. 41% revenue growth and no small beat there. Beat by 390 million. Now the company at the moment trades at around about 7 to 8 times earnings, but because of how fast they're growing profitability, they're actually down at 46 forward times earnings. Another factor to add in as well is that because they're beating the EPS by much, this is GAAP EPS as well, by the way, the profitability is actually probably going to be even higher than that, meaning the actual forward PE is actually more towards 40-ish times forward earnings, and if you look at the company in trade, like 7 to 8 times earnings, because it's a premium company. You know, you're growing 40+%. You know, not many companies do that, especially with the profitability they do. So looking at MercadoLibre, if they carry on doing these numbers, which I think they will do, I see no reason why. When we come back in a year's time, I don't think MercadoLibre will be the share price it is right now. I think we'll be talking at least 2,000. I think we'll be talking more towards $2,500, $3,000. So yeah, any MercadoLibre shareholders, I think you'll be very happy on this report. And I think when we come back in a year, I think I'm already up like 60-70% on my position. I think by the time we come back to this in a year's time, I think I'll be more up 150% on this position. So yeah, very happy with those MercadoLibre share financials that they've just brought out. And Block, I mean, Block, this one suffered. This was up a bit on when they reported earnings and has been dragged down by the market. Block's a bit of a frustrating one because I feel like Block should be higher than where it is right now, and it's one of those that you sit on a stock, you see them, you know, the EPS was a very good beat, revenue was 11% growth. They did miss slightly, and there was a bit of an impact because of the Bitcoin price movement that they do have, but you know, 140 million misses, not really much on 6 billion, and this company is now focused on profitability, and what they did is they actually hiked up their guidance once again, which was very good. This is a company that's been really focused on profitability, and they've been putting really good financials in, yet you look at the share price of like Block, and it's, you know, for the last year it's not really done anything. This is where it gets frustrating, is when you're in the stock market and you own a company and it does these good financials and then it doesn't show it on the share price, and you're like, well, if there were bad financials, the stock would be down, and now it's doing good financials. You get no share price reward for it. It's a little bit frustrating, and it's not like the valuation's bad on the stock. You know, you talk about a company that's 17 forward times earnings that has, you're buying Cash App for God's sakes. Like, Cash App is the one of the best payment platforms that all youngsters are currently using in the US. You're getting Cash App and a ton of other things as well with Block, but you're getting Cash App here, guys. This is no flimsy thing. This is top dog, and you're getting 11% growth here. The profitability is ramping up at 17 forward times earnings, and they've just hiked up the guidance. It's and then you're getting the share price is going down. It's a bit frustrating when you're in this situation, when you own these companies and then they don't reflect it on not on the financials, on the share price. Because realistically, I look at Block now, and I really like Block, and I think it should be higher. I think that if it was break even, I do think I'd maybe put the money more into PayPal and SoFi. I think I maybe like PayPal and SoFi maybe a little bit more than Block, so maybe I would have distributed that money. But just the fact that I can't do that because I look at the share price it's at and I go, I can't do that to Block, because I look at it and I don't know how this company's at 17 forward times earnings with these financials. And sometimes you have this, guys, sometimes you have this where you see a company that is somehow down on the year after very good guidance and hike up of guidance, and even today brought out good numbers and it's down today. And sometimes this can be the really frustrating thing, because you have these times where you have these good financials and the share price doesn't reflect it, and then all of a sudden you have one bad report and then the stock falls like 35%, and you're like, what the that can be those are the really frustrating times when you're a shareholder in the stock market. And sometimes that can happen, but I'm sure if Block or Square keep doing these numbers, at some point the share price will reflect the very good financials. I mean, look at DraftKings, look at Hims. The times that in 2022 when they brought out mega earnings, and then the stock would fall 20% on earnings, and you just had you had your hands in your head going, what is going on here? But as we know, eventually we saw the reflection, the share price for the good financials that we were doing in like 2023, and we get the rewards. But it is what it is at the moment. So there's a lot going on out there, guys. I hope you enjoyed the video. I'll try drop a video on Saturday and Sunday. Saturday I'm going to talk about maybe a new stock that I bought last week. Sunday I'll do the stocks I'm buying for either the UK or the US. Monday I'll see what happens on Monday. Tuesday I'll try get the Hims and Hers earnings for you guys, and then I'm actually off away for a week, but I'm hopefully can maybe squeeze a few videos in for you guys as well when doing that. But hey, if there's a break, you can make up with it the exclusive content on Patreon with the summer sale, guys. The email to get hold of that deal's in the description, guys. Thanks for watching. See you in a bit.